Let's Talk Property webinar begins in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Good morning, everybody. Welcome to Let's Talk Property. It's our weekly Property Thought Leadership webinar brought to you every Wednesday at this time by Real Estate Investor and Iran Property Group. My name is Neil Peterson, founder and editor-in-chief of Real Estate Investor. We are a digital research platform and also DigiMag for property buyers, investors and professionals looking to update their property knowledge and education. In fact, REI is just celebrating 13 years serving the South African real estate industry. So I'm really honored to be your host today. So every Wednesday on Let's Talk Property, we bring you different topics and we bring you the very latest news, views, insights, and investment opportunities on everything around real estate in South Africa and around the globe. And we're all here to guide you, educate you, inspire, and give you access to information, tools, investment experts, and advice that can help you navigate your lifestyle, your business, your property investments, and also to make your lives a lot better. So we know that everybody right now is trying to navigate their lives and their businesses. And through lockdown and COVID-19, and we say this is the best place if you're in property to come for the best property advice, for guidance, insights on property markets, trends and investments, and specifically from our various expert guest panelists as we have today. Today our webinar topic is Meet the Developers Impacting the First-Time Home Buyers and Property Market, and our expert panelists will share insights as to how to take advantage of the opportunities as we discuss also both the advantages and the pitfalls, and they will introduce themselves to you shortly. To you, the audience, a very warm welcome to you all. We look forward to your interaction and your participation in today's webinar. So please keep those questions flying. Below you'll see there's a Q&A box for those questions. And if you'd like to pose a question to any one of the panelists, then please identify them and pose your question anytime during the webinar in the box. And we will deal with it in our Q&A session in the middle to the end of the webinar. There'll also be a poll with multiple choice questions, and that will pop up on your screen periodically. And we ask you to encourage you to vote and select your choice, and we will actually publish the results live as the poll comes in. And today, our topic, we meet some of the leading property developers in South Africa who've made an impact in the South African property market. And today they will share their valuable property knowledge and things you need to consider when buying into a new development, and also sharing some of their developments and what to look out for as you prepare to buy, whether it's your first time property investment or whether you're buying a house or whatever it may be, or whether you're a more seasoned investor. So the residential property sector has recently reaped benefits of dramatic interest rate cuts, resulting in an uptick in buy activity. And many are calling this a first time property buyer's boom, even during some of the most toughest, and it really has been some of the most toughest economic times that many people are experiencing as a result of lockdown and COVID-19. So on that note, without further ado, I'd like to introduce you to each one of our expert panelists. So Rob, would you introduce yourself, please, to our audience this morning?
Yes, thanks, Neil, and thanks for having us on the show. Very happy to be here. Good morning, everybody. I'm Rob Vessler, Managing Director of International Housing Solutions. International Housing Solutions is a developer and investor in the affordable housing market in South Africa, Namibia, Botswana, and just kicking off in Kenya at the moment. We target what we term the affordable space. It's a bonded market in the sort of 500,000 to R1 million mark. We see that as a very deep market, both from a for sale point of view and also from a rental point of view. That is the rental market is also important to you guys who might be considering purchasing a property for purposes of an investment to rent it out over a period of time, or purchasing a number of properties. We operate throughout South Africa, and as Neil has said, notwithstanding the fact that we're in probably one of the most catastrophic economies that this country has ever experienced, we're still seeing a lot of opportunities in the property space because of the fact that we historically low interest rate environment. So yeah, like I said, we do developments for sale, we do developments for rental, and we also do social housing throughout South Africa.
Wonderful. Thank you, Rob. Thanks for the intro, and good to have you on the show, and I look forward to the discussions a little bit later. Mark, would you please introduce yourself to our audience, please?
Thanks, Neil, and thanks again for having us, and hello to the audience. My name is Mark Shonrock. I'm the development manager for Concor in the Western Cape. Concor is one of the leading wholly owned, black-owned industrial construction, development, and infrastructure companies. We've got a long history in South Africa. We almost at 120 years. Started back in Cape Town in the 1906s, and we delve in all types of infrastructure and property development, from the affordable to the upmarket, both on the development side and the construction side. So we like to self-execute our projects, and we feel there's quite a benefit, and I look forward to the show.
Wonderful. Thank you, Mark, for having you on the show. Matthew, please introduce yourself to the audience.
Yeah, sure. I'm the director of one of the directors of Aquacore Property Developers. We've been active in Cape Town for over 30 years. Our background is very much Atlantic seaboard luxury. For the first, I'd say, half of the lifetime of our company, and the last 15 years, we've been progressively focusing more and more into affordable and investment sectors. Our view very much is that whatever sector you buy or rent in, you deserve the best of breed and the best of product. And so we've taken our experiences from luxury housing, and we've incrementally tried to bring that more and more into the affordable parts of the market. But our view very much is whenever we do a development, it's about investment. So we don't look at any specific part of the market as our part. We just look at what is the part where our purchasers can make the most or get the most value now, and that's where we focus. For us, it's about quality and about the relationship between price and quality.
Wonderful. Thank you, Matthew. Thank you for the introduction. David, would you introduce yourself to the audience, please?
Sure. Thanks, Neil. Hi, everybody. My name is David Cohen. I'm the Managing Director of Signatura Property. We are, I guess, relatively new in comparison to the hundreds of years and decades of experience alongside me here. But we've been around for just around 10 years. We come actually out of the Robbie Property Group stable, and we've been a Cape Town-based developer where, again, also on the Atlantic Seaboard, City Bowl, our big kind of specialist niche has been in the brownfields or redevelopment area of urban nodes in Cape Town. And one of the where we can concentrating on specifically now in Woodstock. And again, it's similar to Matthew, lots of experience in the luxury and upmarket sector, and trying to bring that knowledge and understanding into what we would call the middle market. And that's what we do.
Wonderful. Thank you, David. I hear there's a little bit of an American twang there. I would assume you spent a little bit of time over there.
The fact that you're only calling it a twang is bad, because I am American.
Okay.
lived and grew up there, and I'm glad that hopefully there's no Americans on here listening who are going to make fun of me afterwards. Unfortunately, the South African accent is quite infectious, and there's no Americans here for me to retain my individual speech patterns. So yes, I am American. I grew up there. I've lived a few places over the world, and I've been here for the last 8 years.
Okay, wonderful. We'll probably ask you about questions about Donald Trump right at the end. It might be for interesting debate.
Personal friend of mine.
Right. Good. Right, so moving on to our panelist questions, and I'm sure everybody's dying to hear. So, Rob, I think maybe everybody's asking this question, and is this a good time to buy property right now and or invest right now in property? And why? Because, I mean, it's obvious, we've gone through this tremendous and tumultuous time where the markets have been decimated, but there's ups and there's pros and cons. Do you want to maybe share why it is a possible good time to buy?
So this interesting time, particularly we're talking about residential property here, and I think we're all happy that we're speaking about residential property. I've been a residential bull and in the residential market for many, many years, but I've also spent time in the non-residential market. And the one great thing about resi is that people always need a place to stay. So if you've got a great product at the right price in an area where there's a lot of people, you're going to sell it, and that's one of the key differences, particularly in the current market, between residential and, for example, retail and office. So the economy is having its problems, but people still need a place to stay. And particularly, I would say, in the markets that we're all operating on, we're all focusing on bringing a good product to market at the right price. Matthew made the point, there was a time 10, 15 years ago where, a quality, affordable housing product was, build it for as cheap as you can, put as little as you can in it and sell it. That's not the case anymore. We all build, very, very high quality products. There's a lot of thought that goes into it. The development that you see on the screen behind me is very similar to a lot of the affordable developments that we're doing around the country and in sub-Saharan Africa. It's a Burgerman design. It's a product that sells for 700,000-800,000 rand, but it's a Burgerman design. It's been thought out. It's very high quality. It's efficient. EDGE certified. Very efficient from a utility point of view, which is key in this day and age. To try and help the user use as little electricity and water. There's not a lot of either of those in our countries. I know there's plenty of water in Cape Town at the moment, but in most other areas of the country, there isn't, and it comes and goes. We're in a fantastic situation right now that interest rates are as low as they've ever been. I was developing housing in the late 90s when interest rates went up to 25%. So, younger people might be flabbergasted. Neil will remember that. Young people might be flabbergasted to even hear that number, that, we actually built and sold residential properties to first-time buyers when interest rates were at 25%. It seems insane. So, the current opportunity, one of the beauties about residential property in particular as an investment is its gearability. I'll often hear people say to me, oh, well, the stock exchange did, 10% last year and residential property only did like 4%. The fact of the matter is, what was your equity investment in that residential property? And the gearability of the asset is that your return on the equity invested, over a period of time, can be great. And it's brick and mortar. It's easy to understand. You can see what you're investing in. And particularly in the affordable and middle market in South Africa, there's always demand for that product. So, and we've seen it, we've seen it throughout lockdown. I'm not trying to pull the wool over everybody's eyes and say that, this is a great time for everything. But we've seen the demand, even during lockdown, we sold units. We've got, affordable schemes similar to the one on the background that you're looking at, in Johannesburg and on the north coast of KwaZulu-Natal on the south coast, the Parklands area in Cape Town, and they are selling, and they are selling because people need a place to live, notwithstanding the fact that the economy is where it is. And so we think it's a very good time to buy.
So just in terms of new developments, and it's, I've had personal experience of this. When you buy a new development off plan, and so generally we find that people would like, and it's actually a question which we can debate a little bit later amongst the entire group, is when you do buy it and you reserve your unit today, it only gets delivered sometimes in 12 months, sometimes 18 months later. And I think there's a tendency, what a lot of people don't realize, you get the upside of the property as soon as the structure is up, and then all of a sudden demand grows. Is that true? Is that a fact? And and is it an opportunity?
It's definitely a fact, because you put down a small deposit, and obviously the equity value of your investment grows over the period of time that you hold for. To be clear, you can get caught on the wrong side of the economy. A lot of people have lost their jobs in the last 6 months. You might have bought a property. I happen to be taking a transfer of a property that I bought in Observatory long before lockdown next week. And and lockdown has been what's happened since I bought that property. But people lose their jobs, and then they have to rethink, whether or not it's the right thing to do. Sometimes the banks will rethink whether or not they want to support them from a bond point of view. But the property can grow, even if it's 5 or 10% over an 18-month period. Your equity hasn't actually been in play, and your asset has grown significantly. So, particularly in even an average market, that's very useful.
Fantastic. Thanks for sharing that. Well, Mark, as a first-time home buyer developer, what are the key elements that you look for when developing a product? I mean, given that you've obviously done your market research out there for buyers.
So, Neil, I think Rob touched on one or two of the points, and probably the first key element for us is location. And it's an age-old saying in the property market: location, location, location. But what we found in the past is that a lot of the affordable first-time home buyer type products are quite far out in remote areas, and you spend half your time and half your income traveling into work. So for us, I think as a starting point is we look for sites that are key in terms of public transport, access to jobs, potential future growth, both from a property asset point of view, but also potential growth in the commercial side of the area. We were talking before the webinar started, and I think the Observatory Woodstock type area is a perfect example where there's huge potential for future growth. So site location is key for us. Another key element is, I think, the ability to create a precinct. Again, a lot of the time we found that certain first-time homebuyer developments were fairly singular and standalone, and that's great, but you have no control around your surrounding and in terms of security and upkeep and that. And the ability to create a precinct gives you some chance to, be in control of your destiny. So that's quite important for us. We don't look for standalone sites in areas because we don't have control. We'll design a great building, but then the area might go backwards, and then the people lose their investment, and then obviously probably the key element at the moment is affordability. And you need to find land and sites that can help assist in keeping that price point down, because everything is about the affordability and the target market. So you do have to think of it differently and approach things differently. But I think there is massive opportunities, and government is slowly coming on board. You saw the announcement last week about Mooi Kloof being released in Gauteng. I mean, that's a great sort of example of partnerships where government and the private sector can partner, whether they provide the land or the bulk infrastructure. There's huge synergies, and if you really delve deep into it, there's so much opportunity out there, and I think it's our responsibility to get in there and unlock it as responsible developers.
Wonderful. I think we were hoping to get Steve on the show as well from Bowen. I don't want to push it, but I mean, it is a great initiative. Do you want to just expand a little bit there, Mark, and how has COVID affected your approach to product design, or has it affected it at all?
It has. You know, we were actually affected personally firsthand because 99% of the time, the first-time home buyer products, and you can see it in Matthew and Rob's backgrounds, is going to be apartments, and exactly the same as ours. So, and they are fairly small apartments to keep the price point down, and that. So what we've learned and how we've adjusted our strategy is to focus more on amenities, and I love the saying of sort of sleep small, live big. So your apartment and your unit where you live is really just a place to sleep and be with the family, but essentially you're going to live in the outside area and the amenities. So it's become a big focus for us to create not only outside public amenities, but also defendable spaces. You know, we were locked up in our apartment block, and we didn't have any sort of amenable areas or community facilities. And just having that sort of small area or garden where you can go outside as a family and enjoy some quality time in the sun. You know, we weren't allowed outside into public areas, but if it's a private area, it allows you to have that luxury. And, you know, hopefully we never have to go through something like this again. But if it ever happens, it's definitely being incorporated and a major focus in our designs going forward.
Wonderful. Thanks, Mark. Matthew, on your side, position versus price. Tell us a little bit, because obviously we've alluded to it a little bit already with Mark and that kind of stuff in terms of the South African transport debacle and being close to where you live and all that. Do you want to maybe just give your view on that in terms of positioning versus pricing?
Yes.
What are your views on that?
Neil, one of the challenges as a South African developer is re-educating the South African market out of the North American paradigm of a car-based society. So the town planning, which has existed for the last 50 years, only works on the assumption that we have an infinite supply of petrol, which clearly we don't. So what we have to start looking at is the fact that there's a massive time, financial and human cost to getting into a car for 2-3 hours a day and taking yourself from where you work to where you live. So the one thing that is disrupting that is the post-COVID working environment, and people are more able to now work from where they live, which makes your living place that much more important from a layout point of view. But it also starts to really allow us to question this idea of position versus price. The perception in the South African market, and the thing we've got to fight against, is that most people want a little property with a single-story house, a place to park their car, and a place to drive with their friends. That is a perception which is causing our suburbs to grow and is causing the people in the suburbs to have a transport cost and time that is detracting from their lifestyle. Those people have to make the shift and realize that in a certain income group, at a certain affordability group, the cost of owning a car is having a huge effect on their lifestyle. People in those income groups should be spending less on transport and more on the place that they live. You're getting a return on the place you live. It affects your lifestyle. Your car is the worst investment you're ever going to make, and all it does is burn through petrol and burn through time. So what you have to start realizing is that to a great extent, this need in South Africans to have a fancy car is an ego-based decision. And we have to own that so we can move away from it. Realize that the car is a necessary evil, but spend as little time and money as possible on that. Free up as much of your available money for investing in the best property you can. Then the next question comes is, where is that property and what is best? Best doesn't mean the biggest property you can afford, because often that's pushing you out into the suburbs. Best means the balance between quality and position. So if you look, for example, at the development Mark has just done, they're creating a precinct where people can work and play within the precinct. You can be brave and move to Conradi and not own a car. If you look at what David is doing now in Deer Park, if you work in the CBD, you can be brave and buy in their development, cut down from 2 cars to 1 car, use Uber and Uber down the road. If you look at our project we've launched in the Kenilworth, if you're someone who doesn't need to drive to town to work anymore, don't buy in town. Buy out of town, get a bigger apartment, have less cars, and the money and the time that you were spending driving and paying for an overpriced car, put that into your apartment, buy a bigger apartment. Now when there's a lockdown, instead of being stuck in 50 squares in an area you didn't need to be because you're no longer driving to work, you can be in 100 squares in a place you'd be happy to get locked down again. The converse applies. If you have to be in town for work, go for a small apartment, exactly what Mark said, sleep small, live big. Concentrate your money in the best apartment you can afford, know that you'll enjoy capital growth, walk out of your apartment block and walk to work. So we can only do so much as developers. We can take the horse to the water, but ultimately, as a buyer, as a first-time buyer, what you have to realize is that there is a change in your lifestyle that you have to make, because ultimately most South Africans are burning through most of their investment potential on cars. It's a sad, sorry truth. Especially in the middle.
Very good point. In fact, Professor Francois Berulli calls it the 40-40-40 principle. You're living 40 kilometers away, spending 40% of your income, taking 40 minutes to get to work every day, where it could be utilized so better, going to the place where you live. And also we've had the other trend, which is another debate we can have a little bit later, where people are working from home as well, which is a new trend, but I think it does back it up. I think that's another separate question there. But thanks for sharing it, Matthew. I think it's such a valid point. David, we're going to bring you in here. And I know that you operate also in Cape Town. I know we've got a bit of a Cape Town bias today in terms of developers. Sorry, Rob. Steve was supposed to come, and we were going to get a KZN, but I'm sure I know you operate in Cape Town as well, Rob. So not a problem. But David, why would anybody want to live in a small flat in a post-COVID world in Woodstock?
Yeah, so I think Matthew really hit it on the head perfectly, to be very honest. There's so much. I as an American, I've lived in some big cities, New York, Philadelphia. I've lived overseas in other European style cities, where as Matthew was saying, having that chance to live in a small single-story house, commute, that's actually not an option even. And so people are used to the concept of apartment living, public transportation, and or alternative transportation, bicycles, mopeds, et cetera, et cetera. And so we're trying to do little nudges to get people to consider those types of lifestyles. And so to go to your question about Woodstock and post-COVID, I think as humans, we have a tendency to not look too much farther than what's right in front of our face. So what's right in front of our face now is COVID. Everything is COVID, and how COVID living, and what mask am I wearing today, and do I wear my buff or do I? So I unfortunately or fortunately in this case, I think property is not what happens in the next 6 months, and I think in some ways, people who are either looking to invest or buy as a first-time buyer, they need to take a little bit of a longer view. I'd say, short of 5 years, you really are actually now in a speculation type of environment, and you can do very well, or you can get burned depending on the market timing of when you think you're going to be in and out of a property. But for example, and I'm sure all the other guys will, can go through how long it takes for them to go from a piece of paper into, a finished building handing over to their clients. But you're talking about, in some cases, a minimum of, say, 3 years, and, the maximum, let's not even go there. So, for something that will take me 4 years to go from pen to paper to finishing, why as an investor or as an owner would you only have a 1 or 2 year time horizon? You're talking about a major capital investment. It's something that people should really think about and think, how is it going to affect my life? Can I live with it? And how am I integrating this into either from an investment point of view, or into my lifestyle? So Woodstock, for our point of view, why Woodstock is because I think over the long term, I'm not personally really thinking that COVID is going to have a major effect in how people want to live. I mean, people are basically willing to break the law to meet other people and have social events and do everything. I'm not condoning that. I'm just saying we all know that it's happening. So to think that everyone, and I'm not having a judgment either, to think that everyone is going to move out into the Karoo and have their home office there and never see another person, except for when they go to the shop once a week. We're not geared for that. I think it's an innate human need to be social and to be around people. And for that reason, Woodstock for us is a perfect node. Woodstock has been coming on for 20 years, but really because it's really of a reflection of what's happening now in Woodstock and also what's happening, just down the road in the CBD. We've really taken quite an intense interest in what's happening and almost creating our own, Woodstock precinct / CBD. And so we have a rollout of, quite a few buildings within its own little precinct to kind of create that node environment that you might get in an estate or somewhere, far off where you can kind of plan everything. And we're doing it, within the community that's here now. So Woodstock has a lot to offer. It's a minute and a half from the CBD. There's lots of culture. One of the things that we're lucky is that we get to do a lot of kind of small innovations. We're big believers in kind of a carless environment. The development you see behind me, there's no parking at all. You get a electric scooter that comes complete with your apartment so that you can zip around Woodstock or get to the CBD, because it's actually pretty easy to get around Cape Town. I mean, as a foreigner, I can tell you my first impression when I moved here, we're driving around in other people's cars, like, geez, everything is 10 minutes away. And we spoiled because of that. It's intensely easy to get around the city. We just don't think about it because, and this sounds quite condescending, non-Cape-Townian, but we're used to getting into our cars and just literally going down the block, but you don't have to. You can walk, you can take a bike, you can take a scooter. It's all within our reach. And I think Woodstock is, prime position to take advantage of that. It's just as close to the CBD as Greenpoint, but people don't think about it in that way at all, but it is. So that's how we've taken a look at it.
Great stuff. Thanks, David. I'm coming back to you, Rob, because and one of the questions I think people want to know, certainly from from the investor perspective, is where should I be looking to buy? Now we've heard obviously arguments in Cape Town or Woodstock and that kind of stuff, but from your perspective, where and why? Where should they be looking? I know you're based in Johannesburg, but I know you have national development. So maybe let's just take an extension of the conversation that we've had now, for all the good reasons that everybody has explained from your perspective.
So when we're looking at when we're looking to make our investment case, and I think these things have been touched on, to have a successful residential development or investment, you need to be where there's people, but not only people that have a level of affordability, and where there's infrastructure, and where there's growing infrastructure, even better. I think to David's point, you're going to start seeing more and more reuse of infrastructure, and we're in a infrastructure short environment at the moment. So there's not enough infrastructure, and infrastructure is expensive. And if there's a complaint we may have, it's that the local authorities are generally pushing the limits quite hard when it comes to costs of bulk infrastructure. So reusing infrastructure, as David and Co are doing in in Woodstock is very viable at the moment. We also happen to be in an environment where, we saw it in the CBD of Johannesburg, 20, 30 years ago, where, offices started moving out and there was a lot of available infrastructure that could be, tweaked. And it was. And the residential market in the Johannesburg CBD and others, grew quickly. What we're seeing now is office infrastructure, even retail and warehouse infrastructure, becoming available and being retooled into very viable residential infrastructure in great areas, close to amenities, very well serviced. So plenty of bulk infrastructure. Areas in Johannesburg like Sunninghill. Those of you that haven't been through there recently, there's office blocks that were A-grade office blocks 10 years ago that are being turned into really good residential accommodation close to amenities with lots of space. As an example, we're busy with a refurb of an office block just off Linwood Bridge in Pretoria. It's a very, very good area. It's an A-grade area. It's an area that's well serviced from an office retail point of view. So close proximity, walking distance for our buyers. In this case, we're actually gonna rent it out initially. We're not going to sell it, but to Mark's point about sleep small, live big. There's a lot of space in this redevelopment that we're doing. So really funky, smaller space for your own private space, but it has squash court, it has a cricket net. It has, lounges and Wi-Fi rooms. I think I agree with David's sort of version of events that COVID's not going to change the property market, for the next 10, 15 years. But what it probably has done is it has speeded up some of our thinking. I think even prior to COVID, people were starting to realize that, you could build smaller sleeping space with really good amenities where people could, if they wanted to, work comfortably in that environment, and be closer to, restaurants, shops, workplaces, and the like. I think COVID has sped that up a little bit. I think some things will change. I think, people will realize they don't all have to jump in their cars at 8 o'clock in the morning. And for some reason, for some crazy reason, we've been doing that for years. Everybody gets into their cars at the same time every morning and at the same time every evening, and we sit in the traffic jam. I think, if there's one thing we have all realized through COVID is, even when most people are back in the office, you don't actually all have to arrive at the same time. It's actually just...
Absolutely.
So I think that, that product redevelopment, and again, where do you want to be? You want to be, not only where do we want to develop, but where do you want to invest? We want to invest where there's people, where there's demand, where there's infrastructure. And by infrastructure, I mean all kinds of infrastructure. You want to be able to walk across the road to the shops. You want to be able to have an office close by. You want to be able to, be close to entertainment. And some areas like, we're quite heavily invested in an area like Sunningdale in Cape Town, which is a little bit further out than what these developments are. But the main reason that we started investing there probably 7 or 8 years ago is that it's a single landowner. There was a great degree of transparency as to what infrastructure was coming in there. There's lots of schools, lots of retail, office, warehousing, very good road infrastructure, and on a My City bus transport corridor. So, sometimes you do have to go a little bit further out to find affordable land, particularly to do an affordable product. And when you do that, you want to be very clear that all of those kinds of things are happening, because you don't want to get stuck 40 kilometers outside of the city with no retail infrastructure, no office infrastructure, no entertainment infrastructure, and no public transport infrastructure. I think, those spines, and Conradi is the same, those spines that are being developed where there's good transport infrastructure and good alternatives, so that you don't need to get in a car every morning. I think that's very important.
Absolutely. Great
Neil,
stuff. Thanks
I
for
just say one
sharing.
thing. Can I just
Yes, certainly. Sure.
on top of Rob, I'm going to give a little bit of IP here for Signatura, free to anybody, but it's actually governed my life even prior to developing property, but as a renter, tenant, and just living in cities. We basically develop property as if we are tenants, or there's the trifecta, the triangle of there's three things that I always said, what is important? Where is my coffee shop? Where is my grocery store? And where is my bar? Those three things. If they're
not in that
all
order,
three of those,
but not in that order.
well,
Filling the bar was on the top.
so it's a triangle, it can turn any way you want it to. But if those three things are in walking distance, and so which is basically an equation for convenience, then that's then you're in an area where people will want to be, because those are kind of representative of all the needs, social, food, et cetera, et cetera. And I think that really is what Rob is saying. If you have that convenience factor, that's where you want to be.
Yeah. So Mark, thanks for that, David. Mark, also from your perspective, I mean, I know you've got Conradi Park in the background. Conradi Park is exactly that, isn't it? You built a whole own community. Maybe just tell us a little bit about what they. And what I do like about the group over here, you're all operating in different areas, and there's good arguments to be in every single one of them. So we've got 3 in Cape Town, and in fact we've got 4 in Cape Town. Rob's also in Cape Town, but you're all in different areas of Cape Town. So Mark, just tell us a little bit about the vision of that. Given the whole transport that you explained earlier very nicely, about Conradi Park and what the longer term plan is for that.
So Neil, if I could just correct David there on the trifecta. I think he got it a little bit wrong. It's the first one is your wife's favorite coffee shop. Then it's your wife's favorite shopping complex. And then it's the school. So that's maybe my trifecta that we look at.
I have to admit, I developed this theory of life in my early 20s. So you're right. I wasn't as forward thinking as I probably should have been.
But yeah, Neil, just to get to Conradi Park, it's an exciting opportunity for us in that it ticks all of the boxes that we would look for as a developer. So, from an ability to create a precinct and create an environment and a community where we can try and instill the values that we would want to have live forever in the development. We have that ability to provide the amenities that will assist in keeping those values running, and then also from a location point of view, transport, access to jobs, it ticks all of those. And then lastly is affordability. And I think it's a prime example where we've got massive cross-subsidization between the open market type products that we've all used to be involved in the boom days, and a more affordable product where we really, our key focus is to create homes for people. And it's a beautiful example of the way that there are opportunities to create these cross-subsidization models. And again, it's just how we approach it and how we approach it differently with government. That was a key element for us.
So just tell us a little bit more about the amenities that you got within that development, because you've got a FLISP community, you've got some apartments, you've got retail, you've got schools, and in fact you're sort of in a very centralized area of Cape Town, right opposite a big corporate. In fact, the head office of Old Mutual. So maybe just give us in terms of that community, because I'm just trying to give people a sense of kind of where we, the kind of developments that are coming into the market that is different. I mean, look at Century City, which in fact David's partner, Johnny Raby, built. I mean, it was his vision. It's a brand new city. And just today at the CCID, the Pineland Central area is actually at the moment, it's larger than the Century City area, which is quite interesting. But certainly the fact that you're developing there. So maybe just give the viewers a sense of feel of community of why, and why it's become such a critical area to invest. And in terms of that vision that you've got for Conradi Farm.
So in terms of amenities, firstly, we like to think of it as a walkable Century City. So initially from the start, our urban design principles were pedestrians first, cars second. So we create an environment where there's activity on the streets and there's public interface. We have active retail on the ground floor, and actually cars are almost not welcome. We want the kids to be in the streets, and our roads are designed to slow down cars. We don't have straight roads. We have Woonhoofs. We've taken the Dutch concept of we don't have a road longer than 100 meters that's straight. And then we have a kink. And so it's all about slowing down cars and then giving priority to pedestrians, because we feel that the more traffic and the more eyes there are on the street, the safer it becomes. And that's quite a key element for us. Then parks, we've got a massive linear park, 22,000 square meters of green open space with all the playground gyms and the outdoor stuff that kids like to play on. We've got various pocket parks dotted around. We've got 3 creches. We've got a very broad spectrum of income bands. So we've got creches that cater for all different income bands, so that everyone has a place for their kids to be, because we're all working during the day. And then two schools, a primary school for about 1,000 kids, and then a high school for about 640 kids, going right up to matric. We've got an indoor multi-sports court, a full-size rugby pitch. So it's all about catering for everyone's needs. We've got the on-site retail center with a small business hotel servicing Old Mutual. We've got a bit of retirement in the gardens. So we like to cater for young families, starting key first-time home buyers. The building in the background there is our first product that we launched last weekend. It's actually on sale now, and it's going amazingly. There's 288 units, and they're flying, and it's a perfect example, as Rob alluded to, is if your price point is right, there's a massive demand. Because I think what people are realizing is we're at the point where it's actually cheaper to purchase than to rent, because interest rates are so low, and why not purchase it yourself and own an asset for your family going forward for all eternity, rather than paying someone else's bond. And I think that's a mindset that we're trying to get across. And so that's really what
I think that's a valid point there, Mark. I think that's a big market that has come up, and that's the first-time home buyers market, and that's exactly what we're discussing today, because it has become a lot cheaper to buy than to actually rent right now with interest rates. But we'll get to that discussion. There's a question around that, which I'd like to get you all to answer a little bit now. Matthew, we want to bring you in there. We've been a little bit quiet. I know you're not quiet, but certainly we've left you in the lurch a little bit. But Matthew, before we get into, because you've got quite diverse developments, you've moved also into the affordable space, but you've also been in the high end, as you explained a little bit. But I want you to touch, before we talk about some of your developments and stuff, I wanted you to talk about sectional title versus own title, because people like to know that, and I think the majority of the developers here are obviously pro-sectional title, I would assume, but maybe it is a debate. But let's talk about the pros and cons of sectional versus own title and the real cost of owning a property. Do you want to maybe just tell us a little bit about that, and then what you've been doing, some of your experiences with your development?
So Neil, it ties in very much with the conversation which has just been had about services. So I think before we talk sectional versus own title, it's important to look at that in the context of South Africa. Own title ownership in a country which is working, there's not really a debate. It's a great investment. The reality in South Africa is that you don't get the water, the services, the electricity, the security. You don't get anything that you're paying for with your tax. So when you're a single title owner, it's you and the government, you're on your own, and you effectively have no support system, and you're not going to get what your money goes for. When you buy into sectional title, your government, your council is the developer. I want to comment on a point just now that Rob made, that we live in a water-stressed country. No, we don't. We live in a management-stressed country. Any country which has as much solar as we have doesn't have any energy-related problem. It's generating all my own services right now. Now, in a sectional title environment, we can stockfell the people's levies together, and we can buy systems which they should have been given from council, but we all know the money went somewhere. So as a developer, we take the money from your purchase, we take the money from your levies, and we actually use it for the services that you're paying for, which means you get them. So in the sectional title environment in South Africa right now, you have the security of the development. Looking at what Mark's done, we've done something very similar in Ottery. So we have a project of 348 units, where in that project, you've got a 1 kilometer jogging track, 2 sports fields, a creche, 2 gyms, a skate park. We recycle 100% of the water that goes through the development and put it into our gardens. That development actually creates more water than it uses. We're water positive. We have backup power. So when there's load shedding, everything still runs. So you couldn't do that as a single title owner. It would cost you a fortune to set up that infrastructure by yourself. Whereas we're able to give our clients everything the government should be giving them within their levies and at a competitive rate. So in the South African context, sectional title, hands down the better way to go. But check your developer. Make sure that your developer is selling you the services that contribute to your lifestyle. Because one of the biggest problems as a South African is you're paying some of the highest tax in the world, which you get nothing for, and then you take the little money you have left, pay private security, private schools, private electricity, private water, because that money which you've already spent with the government has been stolen. So we are creating cities within cities. We are creating infrastructure within infrastructure. And I can promise you, your average developer is a lot more reliable than your average politician.
Let's add something there, Neil, something that I think is quite important.
Please do.
Particularly for first-time homeowners to be cognizant of and to have a careful look at before they buy. And I agree with, just about everything that Matthew said. I think what's important to check, because sometimes, even if you're not getting it, you still get charged for it. And from local authority to local authority, these charges differ quite wildly. And that could affect your investment choice. So currently, if you're investing in a sectional title property in the city of Johannesburg, something new that has happened since July this year is they're going to charge you 510 Rand per sewer connection. Doesn't matter where that's coming from. That's crazy. So if you live in a 40 square meter sectional title unit, you're paying that 510 Rand, whether you like it or not. If you live in a mansion in, Sandhurst, you're also paying 510 Rand. It's insane. So it makes no sense. And, we are obviously trying to have this discussion with the city of Johannesburg. We've got a lot of exposure there. But, frankly, if they can't get their heads around this and change it, we'll make sure we don't invest there. This doesn't make any sense to do sectional title development. So those kinds of things you need to look at. You need to break it down. We're all investors and developers in new builds. If first-time homeowners are looking at an existing sectional title scheme, all of the things that Matthew mentioned are obviously very, very important. But if it's an existing scheme that's been running for maybe 3, 5, 10 years, it's also very important to have a look at the financials of that scheme and make sure that they're solvent, that it's well managed, because you can buy into a scheme where suddenly you get whacked with a massive special levy that's sometimes solvable, sometimes not. I think that's key. We've all touched on the green element. I think, again, for first-time owners, there is now a standard. You can ask whether or not a scheme has been EDGE certified, because that is one measurement tool to make sure that it is efficient, both from a water and electricity point of view, but also embodied materials. So that's something we're thinking about as well.
Yeah, so I think there's been a little bit of a can of worms have been opened there in terms of utilities. It's a big problem across, certainly in the commercial sector, and also obviously in the residential. And I think it's a very valid point. In fact, we were hoping to have a very separate discussion on that, a webinar specifically on the rising costs of utilities. But it's very difficult to manage, because to actually get somebody from government to actually come onto the show, it's quite difficult to do that, and in fact to get any sort of comment from that. So, but it is something which is valid, and I think it's something which investors have to be aware of. David,
sorry,
question
I
for you.
I have to interrupt you at that point and say once again that the cost of services isn't increasing. Our government's cost of providing them is. But I can provide electricity right now cheaper than Eskom. I can provide water right now cheaper than the city of Cape Town. And if I provide my clients water and electricity, that cost is fixed for the next 15 years. So, no, I don't buy the cost of services rising. It's just bad planning, sorry.
So what does everybody do, Matthew? Do we all come to you for electricity and water? Can
you
you provide?
Buying it, yes. If you're in one of my developments, that will never be an issue for you.
So if you're developing in the city of Johannesburg, Matthew, you're going to pay $510 for a sewer connection. Doesn't matter what.
Understood, which is why we don't. But our development in Ottery has its own sewage plant on site, which we do 100% of our water filtration on site, and we've had that registered with City Cape Town. There are routes, there are possibilities that one can go, but we have to work on the assumption that for the foreseeable future, the government and the city will not provide services. Treat it as a backup. Don't treat it as your first port of call, because then you've given away your ability.
That's a good point. I don't want to take the conversation away to utilities. I want to get back on track to the investments and for first-time home buyers. So we got some questions here, and first one comes for you, David. You said that first-time buyers shouldn't just jump into the market, but I want to take advantage of the favorable first-time buyers market right now. Do you think that the low interest rates and 100% bond approval will last for at least another year? And in fact, what I'd like to do is open that up to the entire group and get comment from all of you on that, because it's quite relevant. I've got a view on that. I don't think interest rates are going to shoot up anytime quickly, because the economy is in a mess, and it's pretty much so it's just my personal view. But and if they do increase, I mean, Rob did speak about a little bit earlier, 25.5%. I remember the day, it was July 1998. That month it was crazy. I don't believe we'll ever get close to that again, because the fundamentals are just lower. That's my personal view. But David, what's your view?
Yeah, I mean, absolutely. There are certainly, times that seem better to buy than others. I was merely cautioning that I think, and certainly, we've seen it in the last, say, 10 years, where there was quite a big increase in prices, say, between 2014 and 2018, where people were buying 100% with the intention of flipping it as soon as they took handover. And that's 100% fine. If you get advantage and you take that and you market time it perfectly, that it's great. And it's a great feeling to do it. I was merely saying that, property isn't a stock that is meant to do that. If you get that extra, piece of luck, it's fantastic. But, one shouldn't be thinking, let me wait for another year, because and I think I will mention that, but I think the interest rates is important. That I wanted to allude to what you were talking about. Buying now, correct, is probably one of the best times, because it is literally cheaper than renting. And I can tell you that, I've been listening to a lot of what's happening in America, what's going on, and I know it sounds very out of left field, but just bear with me for 30 seconds here, with the whole issue of Black Lives Matter and social problems in America. And a lot of that is not related to income. And just listen to me for 1 second. It's related to wealth. Wealth is not how much money you make every month. Wealth is what you can leave to your children. And I think that where we have a similar issue in this country is that there's a wealth gap more than we have even an income gap. And I think property is probably the easiest because of what Rob said about its gearability, the ability to leverage, the acceptance that you can get. The bank will give you 100% of the price. You don't have to take 1 rand out of your pocket at this moment. Some are even giving more. They'll cover all your fees and everything to include to buy an apartment because the market is where it is. It's an amazing opportunity for people to get on that wealth ladder and to start creating wealth for them and their family. So yes, I think the interest rates, this is where we get into a little bit more of the soothsaying prophet stuff. I do think that they will stay low because I don't see a reason why they can go up much more certainly over the next year or so. As long as inflation stays where it is, around the 3, under the 4%, also another reason why there's no imminent need for them to raise the rates. I think, and let me put the flip side of it. If they raise the rates, it's probably because, as you said, Neil, maybe the economy is doing better, which means you would probably be in a better position to take on that rise as well, because things are doing better, say, over the next 2 years. But yeah, now an absolute opportunity. You can do the math, and you'll see that some people it's not even an additional input, and if it is, a few hundred rand extra on a monthly basis to buy what you would normally have to rent. It's something that I haven't seen in my 10 years here, and I don't think has come along probably in 20 or 30 years, where because of the high interest rates, your carrying costs as an owner or a first-time investor, you were usually waiting for that capital increase to get you that big bonus at the end when you sold. Now you don't have to wait. You really can, with very little equity involved of your own, you can basically cover bonds, cover your levies, and be out better than what you would have as a tenant, which is an amazing opportunity.
Awesome. Thanks, David. Is there anybody else want to weigh in? Matthew, did you want to weigh in?
Absolutely. I mean, I've got to agree with you, David. I've never seen interest rates where they are. And in fact, in our 3 and a bit decades, it's never been anything close to where it is. There was a question earlier about when is a good time to buy property. Any time you ask me that question, my answer to you will be today. Exactly what David said. If you want to do a quick flip, buy some Yeezys and sell them. If you want to make long-term money, buy property. Property will always be a good investment if you buy a good quality product and you wait long enough. But it's a long-term play. It's not a short-term play. Property compared to any other asset class. If you've got a really good portfolio on the stock market and the market tanks, your mother-in-law can't come and live in your portfolio and you can't have your friend run for a braai on your stock portfolio. So that's where property has an incredible human value that no other asset has. You have to have a huge car to have a braai in it, but a small house you can have a braai in it. So really, best asset class. It is particularly a good time to buy now because the interest rates are sitting at 7%. And if you look at Cape Town has a stable 7.5% growth per annum on a 100-year average. That literally means that right now, if you borrow a 100% bond, you're getting a 0.5% win. And that's an oversimplification, but it is actually that simple on a long enough horizon. No, the interest rates are not going to fly up. And even if they go up 1% quarterly, you're still going to be sitting at a reasonable interest rate in a year's time. And I can't imagine it's going to go up that quickly. That would be a massive rise. If you look at what's happening in the economy, it doesn't indicate interest rates going up. So very good time to be buying. A very good time to be investing in units which you rent on. So I would also say that if you have extra capital at the moment, don't upgrade your lifestyle. The right decision now is to buy a second investment property because you can buy now so close to the rental rates that as an investor, put some tenants in there. Great time to be doing that. And as a first-time homeowner, absolutely, it's a good time to buy, but buy smart. don't take the high interest rates and buy something that's overpriced. Work on the assumption that the interest rates are going to go back to 10% at some point and use that as your affordability. Rather buy well within your affordability right now and have a bit of headroom in your budget, knowing that when the interest rates do come up, you can still afford your asset. Don't be like one of the many overnight experts who bought during the 2006 boom and then had to sell at a loss in 2009 when they discovered that they couldn't afford their bond anymore. And don't buy property to flip it in a year, because yes, you might be one of the lucky ones, but more likely you'll be one of the 80% that aren't.
Wonderful. Thanks, Matthew. Some great insights there. I think will be shared with everybody. I'm going to ask, Rob and also Mark maybe to weigh in. There's a question here, and it's one which is particularly aimed at the first-time home buyer. And the question is, I know it's the right time to buy my first property, but what's the very first step? And the reason why I ask that, and it's interesting, there are a lot of experts out there all of a sudden we've seen in property, and I see contradicting information from different sources online, and that's probably where the problem is. What is the source that you're getting it from? But I think as experienced developers out there, you would be pro-investment. Yes, it's expected, but maybe just give this person a sort of a guiding, or even the audience out there. What is the guiding line? Is it the right time to buy my first? We have touched on it already. We've given all the good reasons. What's the first step, and how do I go about that? Rob, do you want to maybe, and then Mark, do you want to come to weigh in there? Rob, you're on mute. If you could just unmute yourself there.
So I think knowledge is power, and we a few of us have spoken about the time it takes us to make an investment decision as professionals in the residential property market. When we look at an acquisition or of a piece of land that we intend developing, David mentioned, maybe 3-4 years it's going to take us to complete this development. We spend months, doing very, very detailed market analysis, pounding the streets, getting other people to pound the streets, understanding what's around that property, what's coming. Very importantly, what's coming to the area. Find out, spend the time. Look at other properties in the area. What are they selling for? What are they renting for? In today's market, I think you've got to be very careful about open space anywhere near you. It's a high risk. You don't want to buy a property that's on the peripheral of the development mode, and 6 months later it's invaded, and 12 months later, there's a 20,000 inhabited informal settlement. As sad as that is, it's going to have a very severe impact on the value of your property. Equally, in some of the CBDs, you've got to be careful about invasions of empty buildings alongside you. So, I think if you're looking at buying a unit, decide on the area that you like. But before you do anything, don't be hasty. Spend the time, understand the market, look at other properties that are available in the area. Be very careful about understanding the infrastructure that's coming in. There are some very obvious nodes, and if we and some of them are under discussion. If you can acquire property in an area like Woodstock or other infill areas, close to the workplace, close to existing retail and office opportunities, I would really suggest you do that. Sometimes affordability is an issue. If you are going outside of an existing node, be very, very careful about understanding the planning and what else is coming into that node, what public transport is currently available, what's likely to be available in the future. So I think just research. We do that. We spend a lot of time and a lot of money when we're making investments, understanding what's existing in the area and what's coming in the area. And I think a first-time buyer must be very careful to do that.
That's great stuff. That's great advice, Rob. Mark, do you want to weigh in here?
So, Neil, I think definitely, as per Rob said, knowledge is power, and the more research you do, the better position you're going to be to make the right decision. My advice and suggestion to him is, everyone has different circumstances, so identify where you want to be, and whether that's determined by where you work, where your family is, where your friends are, what's important to you. Can you work remotely? And once you've identified where you want to be, then you need to check affordability and what's available. Research what's available, find out what the product is, the price range, who the developer is, what's coming in the area. And lastly, for first-time home buyers, I do think it's not out there enough in the market. But is this government program about subsidies for first-time home buyers? And I think it is a great program, and it's working, and it helps people get onto the property ladder and start their asset base, building the asset base for the future. It's an important aspect that this country is lacking. And speak to the agents and speak to the developers to find out, and they're there to help you. That's their job, and they're there to educate you. So ask them the question once you've identified where you want to be, and if you qualify for that, it's a great opportunity, and get into the market. Now is the time.
Excellent. Mark, okay, got a last question for you, David, and then I'm going to ask to go around, do the round robin. We are closing off the webinar for each panelist to leave your parting shots of, what you think people can take away in terms of first-time home buying, investment in property per se, and leave them with some real gems, something that people can take and say, wow, that's something that I could do. And in fact, I'm going to take action on that. So David, there's one more specific question here for you. Will Signatura venture into mixed-use developments within Salt River Observatory area in the medium-term future, similar to Wex or Deer Park Place? You want to touch on that quickly, and then we'll get into the roundabout.
Yeah, sure. So we don't have anything in the planning works right now for OBS or Salt River. We always have it in our eye as kind of like the two sister communities with Woodstock. But, we've kind of taken a strategy of developing the WEX node, which is what we're doing around the existing Woodstock exchange. So we developed WEX 1, which we handed over at the beginning of 2019, and we are building WEX 2, which is behind me right now, with the plans of launching WEX 3 in the kind of end of the first quarter next year. Also, kind of within, it's actually right next to WEX 2 across the street. So, we're trying to create almost a node within the precinct, because we find that there's, like the ideas about the amenities, all of the buildings are connected through an amenities floor, and mixed use is a really big thing for us. So, now we've almost planted our flag. We're trying to concentrate in that area, but we're very opportunistic. If something comes along and it's good, we like the areas, so we'll take a look, but nothing right now. We're certainly looking at WEX as our major focal point in Woodstock.
Excellent. Thanks for that, David. All right, gents, so I think we've come close to the end of the webinar, and I'd like to ask each one of the panelists to leave your parting shots. And we'll start off with you, Rob, for the audience out there, of what they can use as a takeout going forward. Rob?
Thanks, Neil. I think there's been a lot of things said over and over on this webinar today that I think are true. If you're going to invest in property, invest in a property and keep it. There's no quick money in the current environment, but there's good long-term capital appreciation. There was a time between 2000 and 2006-07 where you could make money out of flipping things. Property is not that kind of investment. I think it's an exciting time to buy for a few reasons. The interest rates have been mentioned over and over again. I believe that they'll stay fairly subdued for the foreseeable future. I think the base has been reset. We do have a very conservative reserve bank, so they may go up in 18 months, 24 months, but I think there's a new base. So we're not going to see super high interest rates again. I think the other exciting thing that we're experiencing in South Africa, for those of us that have been in the market for a long time, is product innovation. You know, everything that you're actually seeing on the screens today is innovative. You know, the live, work, play environment is something that was sort of kept for the very high-end market previously. And I think there's some great, affordable, very innovative products available. So, you know, I think, you know, look out for that product. If you are going to buy, you know, you might as well buy something interesting. And there's a lot of interesting, really well thought out and affordable product available in really good areas at the moment. So I think, you know, that's an exciting thing as a first time buyer.
Great stuff. Thanks, Rob. It's a nice way to end. Mark, your parting shot.
I think if there's one piece of advice that I can give to the first-time home buyers on this webinar is sometime this week, take the time to do the calculation. You know, there's hundreds of bond calculators out there, Better Bond, Uber, FNB, whichever one you use, they all give you the same result. And do the exercise of put in the purchase price of these first-time home buyer units and see what your bond repayment is at the current interest rates. I mean, even add on an interest rate of 1% or 2%, you know, like Matthew alluded to, play on the safe side and see what that repayment amount is after you've put in your deposit, whatever that deposit might be. I mean, a lot of these first-time home buyer products, the deposits are really, you know, affordable to get the guys in there and get them involved, and add on all the on costs and do that comparison of what rental you're paying currently. And you know, I think people are very quickly going to realize that they can own an asset for all eternity and pay off their own bond by possibly paying an extra 500 Rand a month, or possibly the same. So I think do that exercise and take the first step. You know, you asked what the first step is. To me, that's the first step, and do it, and you know, contact us on this forum or that, or pop us an email. I'd love to know the result.
Excellent. Thank you, Mark. Matthew, your closing parting shots, please.
Yes, just that the one thing about buying as a first-time homeowner is you want as little risk as possible. So my reminder to you all is that any developer on this panel who's been going for as long as we have, we only have because we're very, very careful. So you must know that your one apartment in a 100-unit scheme, we're taking 100 times more risk than you. So be sure that your apartment is a good investment, because we have to be 100 times more sure that the block is a good investment. When you buy from us, you're not going to pay transfer duty. And when you buy a new apartment, like a new car, it comes with a warranty. And so as a first-time buyer, that gives you massive security. You're not worrying about maintenance, you're not worrying about quality. And the odds are we've been thinking about your investment for 3 years before you make it. So you're in good hands.
Wonderful. Thank you, Matthew. It's a great way to end. I think some really salient points there. And David, you've got the last word. You've got the closing, parting shots over here. Give us your final thoughts.
Yeah, I think, you know, from a first-time home buyer or first-time investor point of view, I completely understand. I put myself in their mindset. It is an incredibly daunting experience. You know, you have a bunch of these talking heads and we talking figures and interest rates and all that, and it is incredibly confusing and overwhelming, because you know it's not like, oh, I'm going to change from Dove to this shampoo, and if I don't like it, I can just go back. You're talking about you know, investment of several 100,000 Rand to 1 million plus and over, which is an incredible amount of money. And I think almost, you know, to piggyback on what Matthew said, is that, you know, as a developer of these types of apartments, you know, we are also aware of the type of clients that people don't know what they need and they're not sure. So ask questions. You are the client. Don't forget that we are here to serve you. Meaning if there's no stupid question and there's no amount things that we can't deal with, and I know that we see it, that no one is expecting everyone to look at a plan and understand exactly where everything is and how you get from here to there. The most basic things, we get it. It's very, very difficult. And I think that shouldn't be a stumbling block to try and get where you need to be. So I would say, ask the right questions. Don't be nervous. And in the end, you will be better for it because of what you'll learn from the experience.
Wonderful, thank you, David. David, I heard that you may be giving us a surprise giveaway to some of the viewers out there. Is that right? Or is that something that you want to bring up?
Sure. I mean, we're running it's not a sales promotion in the sense that it's necessarily for people who are buying, but we are doing a competition for WEX 2, the building that's behind me. People who may know people who are looking to buy. If you have a friend who is interested in buying at WEX 2 and ends up buying, we're going to give you, not your friend who buys, a full set of SMEG appliances from their special Dolce & Gabbana collaboration. So it's quite a cool thing, kettle, toaster, coffee maker, and there are these really cool, exquisite, well-crafted Italian appliances. So all you need to do is let us know. I think send us an email to competition@signatura.biz, and with a lead of someone who you think might be interested. And if they buy, you win some SMEG appliances.
Yeah, we love giving stuff away. So please, there's actually a link. There's a link. So thank you very much for that. That's very nice, David. Matthew, you've also got something. You also got a competition going on.
No, we're trying to outspend each other. We're definitely
the only people who are winning, Matthew, is SMEG, huh?
Great mind. Yeah, what we're saying is, it's the Kenilworth is our first luxury launch in a while, and so everyone who buys in the first month and gets their bond within a month of that, we're giving you 100 grand's worth of SMEG appliances. So we're giving all buyers a full SMEG kitchen. So it's oven, fridge, dishwasher, washing machine, tumble dryer, kettle, toaster, even the basin is SMEG. And we will pay your legal fees up to 75,000. So we're basically giving buyers about 200 grand off the bat, but you've got 60 days and 60 days only.
Great, wonderful. Robin, Mark, don't feel left out. I'm sure if you want to put something on the table, we'll be happy that you would do. But
we've taken 175 grand off the purchase price.
Oh, well, there you go. We've got a bit of a bidding competition. Gentlemen, I'd like to thank each and every one of you. It was a wonderful discussion today, and thank you for all of your valuable contribution. I think it was a wonderful discussion. We look forward to actually engaging with you going forward. And I want to thank the audience as well. But, thank you for joining us and for hanging around for such a long time. All the unanswered questions will be posted on the REMAG website under Education and Ask the Experts. And if you have any specific questions, we'll answer them at info@remag.co.za. And if you're looking for any recording, our recordings are very well viewed. The archives are also on the REMAG website under shows. You just click on webinars, Let's Talk Property, and you can view the recording at your leisure in case you missed it today or had to leave a little bit earlier. It's always available. It's evergreen. It's there. And then, of course, for next week, there's a big reminder for next Wednesday. Don't forget to join us for the virtual property masterclass for first-time home buyers. I think some of you gentlemen are involved with next week. And we've got 4 panel sessions of 45 minutes each. Plus, at the end, we've got a 60-minute property development showcase for first-time home buyers. And I know that there's a lot of you that are participating. If you're not, we will have discussions with you. And developers will be presenting in 5-minute slots of their developments around the country. And this masterclass will be jointly hosted by myself, Derek Watts, Eugene Boniface, and Ipoleng Bakari. And it's from 9 o'clock to 1 o'clock. There is a link there, but be there. We've already got over 2,000 people registered. So don't miss it. It's great educational information. And then, of course, don't forget the other REI REDA, which is the Real Estate Investor REDA Conference, which we're doing in 3 sectors. We're looking at peering into the future of the South African economy, which is on Tuesday, the 20th of October. And we've got Darby Roth, we've got Nikki Weimar, 2 economists who are going to give us insight, and obviously on the commercial side, Estienne de Klerk is going to tell us what's going on in the commercial sector and looking into the future. And then on the 3rd of November, we've got an insight and peering into the commercial property market. And then on the 20th of November, we're looking into the residential market. So please don't miss that. This particular webinar is a paid one. It's only 350 Rand, believe it or not, for all 3 webinars, or 150 Rand per webinar. And so click on the link below to register. Once again, to all our guests here today, Rob Besselo, Managing Director of International Housing Solutions. Thank you very much for your contribution today. Mark Shonrock, Development Director of Concor. Matthew Quinton, Managing Director of Aquacor. And David Cohen, Managing Director of Signatura. Thank you all for your contribution. And I'd like to end off with the inspirational quote for today. Buying real estate is not only the best way, the quickest way, the safest way, but is the only way to become wealthy. And that was quoted by Marshall Field. So I'd like to end off on that note. So I'd please like to encourage you to stay on to view some incredible development videos from our panelists that will play at the end of this video. Thank you all for joining us. And until next week, remember, it's our virtual property masterclass. It starts off at 9 to 1 o'clock. You can come in at any time at different segments. And this is Neil Peterson of Let's Talk Property signing out. Thank you all, and we'll see you next week.
I'm gonna take you on a ride. We're gonna burn through the night. Why you so salty? I'll still take a bite.
Okay, we can take my Lambo. I'll put on a tight show. You sure you can handle? We be faster than Django.